Welcome to TheoTrade. This is Don Kaufman. You are watching the Theo video for April 28th, 2018. Once again, we see a bit of volatility this week. It seems like, this is Groundhog's Day. We're saying that each and every week. A bit of volatility in a given week. So in this last week of trade, we had about a $48 expected move inside of the SPX. That ultimately means we can move, up about $48 or down about $48. And once again, we've seen this kind of week after week. We exceeded the expected move this past week. We exceeded it to the downside after what became a fairly wild and yet quiet sell-off on Tuesday, a little bit of a lower volume sell-off. And I say it's a little bit quiet because it kind of snuck up on us, and all of a sudden we're seeing, big time reversals in a number of key underlyings that had earnings. And the next thing we know, we're down and down big. In fact, on Tuesday we traded outside of the expected move of the SPX, only to see us kind of rebound on the entire week. I mean, if you look at the SPX, which again, you're talking about, a $2,670 product week over week, literally from Friday to Friday, it was unchanged. Okay, about 10 cents of change. However, we ended up absolutely nowhere. We had to go everywhere, unfortunately, to get absolutely nowhere. Interesting irony of that, even the previous week, we were trading right just again, a few points away from that. So really over the last, couple of weeks, we've seen big oscillations in volatility, yet ending up fairly stagnant inside of this range. And we'll show that in a little while here in terms of the charts, that we're just pinging again back and forth, specifically pinging back and forth in the S&P futures from some key levels that we've discussed extensively, those being 25.75, 26.26, 26.82, those three levels. We're just literally pinging back and forth over the last couple of weeks. Now, to spend a little bit of time before we do jump into the charts, a few things I want to discuss. Number one, whether you're bullish or bearish, I think at this point in time, gotta be a little bit nervous following some of the mega earnings announcements. I call them mega earnings announcements simply because they're mega market caps. The Googles, okay, Amazons, Intel, Microsoft, and I say you have to be a little nervous whether you're bullish or bearish. People, we saw some wild reversals on what were unbelievable earnings numbers. And you can even throw Amazon inside of that category. And I know that Amazon finished up the day huge on Thursday, right? Then it releases earnings, absolutely blow out earnings. The stock explodes, and then had, again, a reversal as the day progressed. I don't know how many people, looked at, for example, Intel. Intel smokes earnings, completely reverses, and is actually down a portion of the trading day on Friday, only to rebound. Similar story inside of Microsoft. And earlier in the week, we had similar results, in Boeing, similar results in like Caterpillar, which again, we're seeing some fairly spectacular earnings numbers, and the underlyings completely reversing after the earnings are out. I mean, these are announcements that even if you held the earnings in your hand the day prior, you still wouldn't necessarily know how to even create a trade on those earnings numbers. And it leaves me in a little bit of a lurch moving forward. And I got to tell you, with my own positions right now, what I'm electing to do is just be extraordinarily selective right now. Okay? I'm not taking any bigger, broader stance. Now, granted, I still maintain, duration short positions. But those duration short positions, again, are in very specific sectors, very specific underlyings. I'm going to take you through those a little bit. Again, after some wild reversals, earnings that are all over the place, and again, some of the earnings have been just stellar, let me take you through some of the longer duration positions and some of the shorter duration positions, and then we'll actually get into the charts and discuss really what we're looking at kind of moving forward. So to kind of give you a quick update, as I said, I'm being extraordinarily selective with some of my positions. We'll start with a very small position inside of Costco. This is a short-term, again, very short-term bullish in-out spread I've placed inside of Costco, looking for Costco to crest right up to around the 200 level. Next, HYG, it's the high yield junk. I've taken a short position inside of the high yield junk. It's an in-out spread, still good for just over about 30 days. Again, it's an in-out put spread, slightly bearish. Next, long VIX position. Why? Because I think volatility right now is still sitting there teetering on exploding back to the upside. It looked like in the VIX that 15 was kind of the low level right now, and it seems to that we're falling again into this new norm where 15 is the lower level inside of the VIX. We look like we're going to pop back to the upside, so I'm using a VIX volatility spread, take advantage again of a burst of volatility, possibly sometime in the next 60 days as reflected in the position. Next, we come to a short XLE, that's the energy sector. Again, this is an in-out spread. It is a bearish spread, only good for about the next 30 days. Moving on, the XLF, financials. This is, I'm actually taking two different positions inside of the financials. First of all, in the financials, I have a long duration, okay, synthetic short position. What that effectively means is I'm short the financials and I'm short for the long haul. How long is that? Listen, I define duration as anything beyond 90 days, but I've already been short the financials for a pretty substantial period of time. It's paid off nicely. I'll continue to keep the position on. I also happen to have a short position inside of XHB, the home builders. Well, that kind of reflects, though, my overall feeling on interest rates. As long as interest rates are still creeping up at that 3%, I'm going to maintain some short positions, okay, inside of things like what? You know, housing, XHB. Now, moving on over there, I'm still maintaining a short position. This is a duration position inside of Boeing. Why Boeing? Again, I'm being extraordinarily selective. Boeing is just like an overcooked turkey inside of the Dow. Anywhere north of the 300 level, just, you know, I ooze wanting to get short Boeing at that point. But again, I'm using kind of a synthetic short position, and I will maintain that position, have maintained that position for a considerable period of time. Boeing, you know, again, they had some kind of blowout numbers earlier in the week. Nevertheless, as the stock actually moved up, not much on us. Last but not least, Caterpillar. So I maintain a long duration position that is a short position inside of Caterpillar. Now, there's a few other odds and ends, some positions that I'll kind of clean up from time to time. But as I'm saying, I'm being extraordinarily selective in effect, what I am trying to do right now, simply because, you know, when you look out to the future of the market, I am absolutely still short overall the markets. But in the very near term, it's kind of an uneasy feeling, especially when you're seeing, again, you know, good has become the new bad. And that effectively means, you know, right, good earnings, blowout numbers, everything. I mean, these firms have, you know, the wind is at their back and the underlyings are still reversing. With that, let's get to the charts, be a little bit more forward-looking. Okay, onward and upward to the charts. Let's start with the SPX and the expected move, not only for this previous week, but the week moving forward. So the SPX, and I'm going to kind of zoom very tightly into this. We'll close up this left side bar. The SPX, as I was saying, again, Tuesday has this wild sell-off, but it was quite quiet at the beginning, and it was basically some reversals off of earnings that kind of sparked some sell-side activity. As I was saying, we ended up trading outside of the expected move, both on Tuesday and then Wednesday, reversing back up higher. And then again, we had an explosive rally coming into Thursday. You know, earnings numbers out of Facebook took us a bit higher. And then what did we see Friday? I don't know. I think you have to call it like reversal Friday in here. Nevertheless, we stayed inside of the expected move. That expected move from the previous week was about $48. Now, here's that kind of interesting irony I was talking about just a moment ago. And that has to do with the fact that this is where the previous week had ultimately started, and this is where, of course, this next week is going to start massively unchanged. Effectively, what I'm saying is throughout the course of the entire week, yeah, we went everywhere to get absolutely nowhere. As I was saying, though, let's be very, very forward-looking. with this and cruise back over to the SPX and the options chain. We'll open up the options chain, and I just want you to see we're just shy of about a $42 expected move. So what's nice about this, and we infrequently get a comparison like this. I'm not saying what's nice about it. All right, look, we started the previous week exactly where we're starting this week. So if you're looking at the upper band and this lower band of the expected move, it just gives you a perfect bird's eye view of the slightest contraction in volatility. You know, when a marketplace stays inside of the expected move at the end of a week, they contract the volatility ever so slightly. And that's in effect exactly what you're seeing here, and a small contraction of volatility. Nevertheless, I got to say, I'm seeing volatility contract over here, but I really feel you still have to be on your game in this marketplace, because there's one aspect that is just shocking, and that has to do, and we're going to go through and look at a couple of the earnings announcements when I was talking about, in effect, some of the fairly wild reversals that we saw. What brings into mind, and what I'll bring into scope over here, is Google, which I think shocked a lot of traders out there. Google seeing this huge reversal after absolutely blowout numbers. Now, I know a lot of people would make an argument about Facebook. Facebook is going to be, the odd product out. Why? Well, Facebook was absolutely beaten down from the scandal, pops higher. I think that was in nothing more than relief. But a lot of our kind of key underlyings, including Microsoft, an incredible reversal inside of Microsoft. In fact, this one is worth looking at an intraday chart. This is Friday's trade. This is Microsoft here in the pre-market after releasing earnings. Again, let me zoom out here for just a moment. And you can see, all right, this is, of course, the previous day. This is Thursday's close. This is as the earnings come out. The stock explodes from roughly 95 all the way into the 98 region, about $3 higher, only to reverse below, and then again kind of drift a little bit higher as the day progressed. But this is the kind of thing I was talking about a little while ago, that it's caused me at this point in time to I do what I call alligator arms. I kind of contract my positions. Alligator arms means, I'm not out there reaching, I'm not out there, putting a huge amount of risk forth, because I have kind of an uneasy feeling about a marketplace that, again, is displaying reversals. It's displaying, increased propensity for some volatility, and yet has not yet progressed to the downside. So again, a couple of reversals over here. I'm sure enough has been said about Amazon, but again, Amazon, this is what I was talking about with a wild reversal. I mean, at one point, Amazon is flying almost 3 deviations out, and then closes well within a 1 standard deviation move of what it was expecting. Amazon was shooting for just around a $75 expected move on their earnings announcement. Again, the thing got up all the way to $16.64. Recognize it closed $100 lower than that, continued to slide. Now, you got to kind of question, is this going to continue like on Monday? Are we about to walk into a marketplace and see the Nasdaq get slaughtered coming into Monday? Or are we going to see the marketplace pause, for what we shall call the mother of all market caps, which happens to be Apple? Because, of course, Apple is going to be producing some results, on what? Right here on May 1st after the bell. Of course, that is going to be Tuesday. That's why I was saying maybe pause a little bit on Monday, or does sell-side activity progress on Monday? A little bit of consolidation on Tuesday. And again, this is what I'm trying to kind of handicap moving forward. One of the reasons, I'm tendency right now to avoid some of the technology. I'm still, again, maintaining some small positions out there in tech. Nevertheless, predominantly my positions, as I was saying, are in things like bonds, the volatility, energy sector, the financials, Boeing, Caterpillar, any positions I have on inside of technology are so minuscule, they're not even worth mentioning at this point. All right, a little bit of a bigger picture over here. Let's cruise over to the bonds. The bonds throughout the course of the week took some pretty big heat. Now, I'm mentioning the bonds because specifically on Wednesday, on the evening video on Wednesday, I talked about taking a bullish position on this bond product, specifically where I took the position, was inside of the TLT. Now, we put on the bullish position on Wednesday. I discussed it Wednesday evening. The bonds took off to the upside. I'm out. I'm out of the contest. What that effectively means, I already closed the positions. So this was a position where we put an in-out spread. We made over 40% on the in-out spread. And one of the pieces of criteria, of course, that we use on the TLT, and of course you can see I closed out of all the positions in here, but one of the pieces of criteria we use on the in-out spread is if you can make over 30% inside of 3 trading days, don't look the gift horse in the mouth, take the position and run. And one of the things though, and one of the reasons I'm mentioning the bond product right now, is the bonds rallied up, okay? And this rally may continue for a period of time, but as these bonds rallied up, I also put on an additional bearish position inside of the financials here. So I've got a multitude of bearish positions. This is a short duration in-out spread on the financials, and I'm putting that on there in anticipation that the bonds continue to rally. It'll start to put some pressure into the financials. I mean, you look at the financials over here. Come on, I'm not much of a market technician, but this situation is coming to a head. And effectively, I expect some volatility. I even expected volatility this past week inside of the financials. We just are not getting it. Again, the financials appear to me to be hanging on by a thread. And I'll reiterate the same point that I made the other night. And that's this, okay? The financials. Look, the bonds have been getting rocked. That's interest rates going up, okay? Tax breaks, again, deregulation, the financials, they've had every opportunity to explode. You have to assume at this point, everything good that's going to happen in the world of financials is already priced in, okay? In effect, okay, I look at the financials, and I talked about this weeks ago. I call this the no way out trade. And effectively, that means, if these bonds, if they continue to rally, it will absolutely put pressure forth to the financials. But at the exact same time, if the bonds turn back around and start selling off steep, the entire marketplace is likely to come down, and that would also pull the financials along with it. It's a lot to think about. Again, this next trading week, okay, try not to worry a tremendous amount about some of the earnings. And yes, I am pointing to Apple. You're going to have to trade, all right, with binary events. And that's just something that you have to get used to as a trader. And there's no doubt, again, some of these, when I call it a binary event, effectively what that means is when, hey, when Apple's earnings come out, you got a 50-50 shot whether that thing's going to trade up or down. And you may not believe that, but even if Apple's earnings now are blowout earnings, you could still see the stock absolutely crater. Come on. We saw that in the likes of Google, okay? We saw that in the likes of what? Microsoft, which didn't completely crater. And I don't think I've given enough credit to where credit is absolutely due, and that's inside of Intel, which had one of the most stellar earnings announcements, okay, in the company's history. The stock explodes to the upside only to reverse and actually finish lower. And this is a mega market cap. So as I'm saying, in this coming week, you have to kind of remove yourself a little bit from this, binary trade. Yeah, sure, it can move the marketplace, okay, unquestionably. However, all right, start at this point in time, if you're worried about these earnings, start to move towards, ETF products. Start to trade things like the expected moves. Again, if you're uneasy, go out there, use some defined risk in-out spreads, okay? Get back, all right? Kind of snipe positions one by one. Listen, we have found that since the volatility has picked up in February, the in-out spreads have been spectacular, okay? Keep your risk defined. Keep your head on your shoulders, get back, make a couple of bucks, because people, this looks like we're going to be in store for some serious volatility for some serious amount of time. Thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.